All right, what's going on, guys? Terry James, your mortgage guy, coming to you. And today, what I wanted to talk to us about and want to go over today is how you can use lender credits, or basically use the lender and points to help pay for part of your down payment and closing costs. All right. So, there's especially in this market right now, rates are really high. Purchase prices are steadily moving, rates are steadily moving up. And so right now what we're finding is that a lot of people are just having trouble coming up with down payment, closing costs. Of course, if the house costs more, if interest rates are more, then your down payment, closing, everything goes up. But one of the ideas that you can do if you are looking at purchasing in this market, and one thing that might be able to help, a quick tip, is to consider using point or lender credits to help pay and cover some of your closing costs. And so, how do you do that? So I talked about how you can buy your rate down, okay? How you can get a lower rate using points if that's a smart thing to do, in my previous video, and something I've talked about before. But today, what I want to go over is you can also do the reverse of that, okay? So what that means is that you can take a higher rate and actually get a what's called a lender credit. So what that means is, just so we can see some numbers and see it for ourselves. So for example, and I love $500,000. If you guys watch my videos, I just nice round number, even number, boom, beautiful. So if you take $500,000 and 1 point, as we already know, 1 point is $5,000. 1 point of 500,000 is $5,000. Okay, so let's just say, and this is not what the rate is today. This is not what your rate is. This is just for the example of this video. But let's say the rate at 0 points is 5%. So let's say you're not paying anything for the points, 5% rate. But let's say you can take a higher rate, and let's say it's going to cost, or let's say you get a lender credit of 1 point. So let's say you get $5,000, but your rate is going to go up 3/8, which is, that would make your rate now 5.375. Okay. So let's say you take a 5.375 rate, loan amount 500,000. How does that affect your payment? Okay. And we'll work through the numbers. So for example, if the payment difference on 5% on 500,000 is going to be about $114. Okay. So what that means is that for $114, you pay extra a month because you're taking a higher rate. But what you can do now today for your closing, you can use that lender credit, or that credit for taking the higher rate. You can now use that to do your down payment and closing. So that gives you a little bit leverage and also gives you a little more flexibility with cash, especially in this market. You might need to be able to offer saying, hey, I'll go over on the appraisal, remove appraisal contingencies, which some people are doing. They're offering more on the purchase price. So now with that $5,000, it allows you to now be a little more flexible, and you can now offer a little more on the purchase price of the home or the appraisal if it comes in short. But it gives you $5,000 worth of credit to use towards your down payment and closing. So that's the thing you can do. And, I use 1% just for today, but you can actually start asking your lender, and looking at taking, what is it like if I take a 5.5%? What is it like if I take, a 0.5% more interest rate? What kind of credit would I get back? The reason why, and then how you want to compare that is, so for example, is the difference in your payment. You're going to pay more, which is, in this case, it's $114 more roughly. Over the first year, that's going to come out to around $1,400, I think it is. For the first year, 1428. So what that does though is, so from there you say, okay, well, I'm going to pay extra 1428 a year annually more. So how many years will it take me paying more to equal the credit that I'm getting? And so in this case, you're going to be right around the 3.5 year mark. So you're going to pay a little more. you would break even in about 3.5 years. So you take the credit today, and over 3.5 years, that's when you would break even with the credit that you receive. Now, why is that important? So, for example, if you were to, let's say you look and let's say you refinance in 2 years, what that means is you've gotten a lender credit or you've gotten a credit of 5 grand, but your payment has only increased for 2 years, which is going to put you around $2,800, $2,900. So what that means is that you're still coming out ahead when it comes to dollars and cents at the end of the day. So you paid extra over the 2 years, you're paying extra $2,900, but you took a $5,000 credit at the beginning. So when you do the math, you're still coming out ahead. Now, keep in mind though that yes, that $5,000 credit is going to cost you overall interest of the loan. Okay, so your interest overall is going to be added on. You pay a higher interest. However, the main thing is, like I said, especially for first time home buyers, you're not going to keep this loan for 30 years. So you're not thinking long term. Okay, you might keep the house, but we're talking specifically the loan. So most people, especially first-time home buyers, are going to keep that loan for 3 to 4 years, 4 to 5 years usually. So if you were to, for instance, take a credit now to help with your down payment and closing, and then you're still going to come out ahead because chances are you're going to refinance by right around that 3.5 year mark. Okay. Now you do want to calculate this for yourself. Each situation is going to be different. The numbers may not add up depending on your loan amount, depending on exactly how much the difference is in points, interest rates, and everything. But that's one way that if you need help with your down payment, if you need help with your closing, that's one way to use lender credit to help get your deal closed, to help you with down payment, and to help you with closing costs. All right, so I hope this has been helpful. As always, make sure you subscribe, make sure you hit the like button, comment, and let me know if there's anything else that you would like me to talk about. Until next time.